Hello, folks. This is Raj Sastri from Raj Option Trading. Today, I want to talk about a Chinese company called 360 DigiTech. The ticker symbol is QFIN. So it's in the financial services industry and credit services, vertical. So according to a research from Mordor Intelligence, the China fintech market is expected to grow with a compounded annual growth of 15%. And this company, 360 Digitech, it's one of the premier companies in the financial services area, and they're also a SaaS company. So this company is well positioned to take advantage of this financial revolution within China. And this report is as of March 15th, 2021. So with that, let's look at this company's profile. So 360 Digitech is a data-driven technology empowered digital platform. Just to draw some parallel, in US we have companies like Square, and we got companies like you know um, PayPal as an example. This is something similar to that. These folks have got a technology platform that enables financial institutions to provide better targeted products and services to broader consumer base. And company also offers the risk management services. They have SaaS modules for institutional clients, and they also have various advantages in customer acquisition, funding optimization, risk assessment, post lending management, and various things. And the CEO here is Hai Sheng Wu, and stock price is 32.23. Market cap is around $4.90 billion. So as you can look at the stock chart here, pretty nice looking stock chart. Just in last couple months, stock has skyrocketed, very well. And the revenue growth itself is around 39%, and the operating margin is around 37%. Not bad at all. And little bit history about the CEO here, Hai Sheng Wu. He has served as 360's financial president since its inception, and before that he was a product director at 360 Group, and even before that he used to be with Baidu and looking after their product department, and also products like Baidu Space, Baidu Map, and Baidu LBS. And he's got some a degree in economics and communications. So looks like he's got good background in the financial area and probably better suited to lead this company. And some headline news about this company. This company just announced the earnings report yesterday, and looks like they did well, and they have a small bounce after the earnings, which is a good story. Leading up to the earnings, stock a little bit sold off mildly, but after the earnings, stock went up a couple bucks. And also on February 22nd, many of the Chinese stocks sold off due to high valuations. This is always a concern for these type of stocks. The valuation is sky high. So with that, let's go into a little more details and see who are the competitors of this company. So in the fintech area, we have several companies in China, and these are the competitors. I also like many of these companies. As an example, I like Up Fintech Holding, which is TIGR. The stock is about $22, and many of these stocks are especially the ones which are a little higher price, like they're pretty good. We can look at them in a different segment. But QFIN 360 Digitech, it's about $31, $4.23 billion market cap, and they are doing very well on a weekly, monthly, quarterly, half year, full year 289.71%, which is really good. They're just a little bit off of the 52-week high, 4% off of 52-week high, and float short ratio is very low, not much at all. And the gross margin itself, they got a very good gross margin, and price to sales ratio is very low. That means this stock is not really expensive. So that's a quick snapshot of QFIN and the competitors. Now let's look at their fundamentals and see what we can make out of it. The stock price itself is around $32 and the market cap is $4.90 billion dollars. And as you can see from this quarterly chart, we got 1231, which is the latest quarter. Earnings was yesterday. We got quarter before that, which is September 30, and so on and so forth. From the latest earnings, looks like they did 3.34 billion RMB, which is Chinese currency, and this year over year from 1231 to 1231 last year, it's about 39% up, which is a good story. They did very well. But on a sequential basis from last quarter to current quarter, I think they're a little bit down. And they've been surprising on the EPS all along, as you can see here. Nice surprise. And they also net income is positive, which is good. They're making at least on the net income itself is positive. Quarter over quarter change is also very good operating margin, and they do have good amount of cash in their balance sheet. And things like loan origination, it's improving, and outstanding loan is also improving. So overall, by looking at this chart, looks like it's a good story. Company is growing, the revenue is growing, which is a good story. And many of these Chinese companies, they don't have picture perfect numbers because they are not held in the same standard like US companies. So that's one of the things that you always notice when you research these Chinese companies. So the stock, market cap itself is steadily improving. That's one thing I always notice. As you can see here, 1.43, 1.17, little bit bump here, little bit hiccup, but 1.57, 1.75, now all the way to 4.90. That clearly tells me, this company is really growing well, and Wall Street is liking their growth, and they're clearly improving their market cap on a regular basis. And so does, same story with the revenue also. There is a revenue acceleration, with the exception of maybe the last quarter, a little bit, lower revenue here. But overall, I think they're doing very well. Fundamentally, I think it's a good company. And we can't look at things like PE ratio in this scenario because it's not a money-making company yet. Earnings per share is also negative. So with that, fundamentally, I feel it's pretty good. Now let's look at the earnings announcement itself in the latest quarter. From a latest quarter perspective, the loan facilitation, the origination volume, it grew by 29%, which is a good thing. And the total outstanding balance itself, there is an increase of 27%, which is a good story again. And if you look at the cumulative registered users, the number of users, it increased by 20%, which is very, very good. And users with the approved credit line also increased by 24.8%, which is again good. Borrowers with successful drawdown, there is an increase, which is good. And financial highlight perspective, total net revenue itself increased by 39%, and operating margin was 37.2, and net income also increased by 180.3%. Overall, a good story. And the business outlook perspective, they're basically guiding for a growth of 26 to 34%, which is again, a little bit weaker than what they gave. They gave 39% year-over-year growth last, this time, but now they're guiding for 26 to 34. I think they want to be cautious, and it's a preliminary review like they're talking about. So overall, from the earnings transcript perspective, it looks like company is doing very well, and they got good leadership going on. Now let's look at some of the performance of how is the company performing from a stock price perspective. On a yearly basis, as you can see here, 2018, I think they just started, nothing much here. 2019, there is a negative 36%. They did not do well. 2020, they did 20%. 2021, hardly 2.5 months, they did 147%. That's a huge progress. Good performance here. Now let's deep dive into monthly performance and see what we see. So on a monthly performance basis, as you can see here, last 3 months they did very well, 47, 34, 36, very good performance. But they do have hiccups, as you can see here. Back in December they had a hiccup, and back in March during the COVID crisis in US, they had some hiccup. And same story, back in September October time frame, probably at this time there was some hiccup in China with the COVID. So the point I'm trying to make here is this company, even though they had 3 very good months here, they do have hiccups once in a while. Stock gets sold off. I would really wait for these stock sell-offs and buy some stock and hold it for a long time. On a weekly performance also, same story here. They sold off pretty hard on 21 February, just a month ago. That was a good entry point, and same story back in December last year. So I would look for these sell-offs. As you can see, your stock has run up so much here. I would really wait for a small pullback. And if you look at the daily performance, on the earnings day, which is yesterday, the stocks sold off. After the earnings today, they bounced back again. So that shows, companies got some resilience, and whenever it gets sold off, it always bounces back. That's one thing I always look for these type of companies. Here also same story, sold off pretty hard, bounced back again. Now let's look at a quick chart here. The way this chart is organized, we got years on top, we got 2021, 2020, 2019, and then we got yearly high, yearly performance, year high, year low, and we got the months here. So this year, lowest price was $11, highest price is 33. That's the appreciation, 147%. March, February, Jan, 3 months in this year, they did very well. That's why I would wait for a small pullback before I initiate a position. And 2020, they did 20% of overall performance. But as you can see here, more red than green. So that tells me, stock always gives the opportunity for you to buy on a pullback. And 2029 was clearly a bad year for this company, did 36% negative. So I think, there are a lot of opportunities here also to buy on a pullback. So overall, by looking at this, this is not all going up type story. This stock always gives a pullback for you to buy. Next, let's look at a technical chart here to see what we can make out here. From a technical chart perspective, as you can see here, implied vol is high. It's understandable, just earnings and got announced, so that's why implied vol probably it will take a while to cool off. And if you look at the quarterly earnings here, stock did not do much. One more here, didn't do much. We had one more here, stock went up. One more here. I mean, it's really, you can see the pattern here. Normally, stocks either stays flat or goes up after the quarterly earnings. So, it's a, good pattern here. But last 2 months or so, stock really caught fire and went up crazily. And one thing I pay close attention is the double top here. There is a double top. We just, pierce through the double top here. I would watch this out. Double top is a negative indicator. So I would watch this out and see, if whether we'll have a pullback or not. If there is a pullback, I would probably buy this on a pullback. So that's one thing I will watch out very closely to see, is this a double top or can they pierce through this and make all-time high consistently. And from a RSI relative strength perspective, as you can see here, we are almost at the top here. We are hitting the overbought level. I would wait for it to cool off a little bit. So as you can see here, we reached overbought position here. We sold off. I would think something similar will happen. Same story here. We became overbought and got sold off a little bit. And from an implied wall perspective, so high implied wall. So if you're an option buyer, I would not buy option at this price. But if you really want to buy, you could buy a maybe a call spread, so that way you're not too much impacted by volatility. You buy in this scenario, stock is at say $33 or $31. You could buy a 25-35 spread as an example. If you do something along those lines, you're not severely impacted by implied wall, so you're still okay. And from a DMI perspective, the blue line just crossed the red line, which is a positive indicator. So that tells me, hey, this run is, it's not a fake out, it's a good run. And from a on the balance volume perspective, as you can see here, stock is doing pretty well. People are buying this stock. That's why on the balance volume is going up. And from a chocolate money perspective, also money is kind of right now it's flat. Money flew into the stock, but now it's kind of sort of flat. So I would probably wait for it to fall down a little bit, a little more pullback before you initiate. So with that, what should I do now? Stock has just announced the earnings. Company has just announced the earnings. So what I would do is really, on an outset, this whole fintech industry in China is really booming. This company is really poised to take a good chunk of this industry. So stock is at 52-week high. And I would think, even though Chinese fintech is booming and this company has got a lot of room to grow, I would really wait for a small pullback given it's at a 52-week high and it's also at a double top right now. I would wait for a pullback. If you want to buy a little bit, it's okay, but don't do big size purchase or wait for a pullback and then pull the trigger. With that, thank you very much. Happy investing.